Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Galileo, Derek White. Great to have you with us.
Elliott, thank you. It's a pleasure to be with you.
Okay, so before we get cracking, we're going to learn a little bit more about Galileo. So, Derek, tell us about Galileo.
Galileo is a business that helps founders and leaders build the future of how humans interact with money. Whether it's a founder looking to build their first digital finance company, where the founder controls the mobile app and the end user interface, and we provide the infrastructure that enables them to bring those products and services to life in the interface. We provide the technology and capabilities for what we refer to as below the glass. And that enables the founders to create businesses that then help them raise capital and to employ people to build businesses across the United States and across geographies. We also work with leaders that are looking to transform and modernize their businesses, building and modernizing their core infrastructure below the glass, as well as looking to drive innovation and bring new products to life in traditional and legacy financial services, as well as helping non-financial companies build embedded finance into their interactions and into their experiences. Galileo today has about 200 million end users across our tech platform, across 200 plus clients that are, as I mentioned, founders and leaders of finance, and across 16 countries where we provide this support across North America as well as Latin America.
Okay, and 2 years ago you were acquired by SoFi, I think, for $1.2 billion. Has anything changed since then?
A lot's changed. Really positive rocket growth over the past couple of years in end users on the account, or on the platform, in numbers of clients that are building businesses and new products and bringing innovation to the market, as well as expansion into Latin America with the acquisition of Technisys, a business that we acquired just in March of this year, bringing new capabilities to our platforms, extending the verticals in which we operate from traditional kind of neo-banking space into large established financial institutions and into non-financial institutions through embedded finance, as well as introducing new products and capabilities to the market.
And we've seen, of course, fintech valuations plunge this year, presenting opportunities for fintechs that are making money and or those with deep pockets. Should we expect Galileo to have more sister companies by the end of this year or next, or perhaps to acquire more companies?
You know, now's an exciting time in fintech and in traditional finance. With the fintechs, many fintechs started with a beautiful end user experience and a narrow product offering. All of those fintechs now are looking to build out additional products and capabilities into the offering that they offer to their end customers. One, because their end customers want deeper experiences in each interaction. Two is that the customer it wants to be able to drive greater monetization opportunities and build for their own valuations. And so those two primary areas are areas where we're seeing demand and opportunity for our clients to be able to serve their existing customers and to grow their businesses, both in kind of startup space and neobanking space, as well as with the established players. Two of the use cases that we're really well known for was the invention of the 2-day early paycheck, bringing that capability to the market as a differentiator in the market. Another is the ability to set authorization levels, the ability to approve and to educate teens through the parent-teen account, where a parent can set approval limits on and educate their children on how to use money and the value of money by setting approval of where they can actually spend, whether it's at the Starbucks on 12th Street or the Starbucks on 25th Street. So it's down to the child, down to the merchant level, and down to the actual location level, being able to kind of circle around the limits on which they want to be able to allow their kids to spend, but teaching good behavior.
Okay, great. So we've heard a bit about Galileo. Let's now get to know Derek a little bit better. So, Derek, you're not a founder of Galileo, but I'm reliably informed you're part of the team that founded the world's first internet bank. I think it was called Wingspan. Tell me about that.
So yeah, I had the privilege of being part of two of the first internet banks, Wingspan, as well as a company called Juniper, that is now part of a large financial institution and their consumer business here in the United States. And I've always been in the intersection of how humans interact with technology and money, and how technology changes the way that people interact with money. Elliott, July 6th, and I will never forget this day. July 6th, 1996 was the first day that an interstitial banner coupled with a web form allowed humans, people, to click on a banner and apply for a financial product on this thing called the internet, way back in 1996. We, as an institution that I was a part of, did thousands of accounts on that first day and opened up an entire new world of how people were interacting with money, applying for new products, engaging with money on the internet. That then has transformed from the internet into mobile capabilities, and from mobile now into hands-free, as to where we can interact with not just on the desktop, not just on our mobile device that goes with us, but when we're driving in our car, we can interact with our money. And that's what I've been a privilege to be part of my entire career. After exiting and selling the business that I mentioned here in the United States, I moved overseas for 14 years and was able to experience how people in Europe, Asia, Africa, Latin America, countries all over the world, how technology and human interaction is different by country, by region, by culture, and how that interaction of technology and money is transforming every aspect of humans' lives for the good, creating business opportunities, true innovation, and transformation of the entire industry.
And I think, Derek, I saw on your LinkedIn profile, you also founded a company called Roomies. Was there anything? I see you didn't seem to be there for very long, so I don't know if that was a success story or not. But is there a story there?
Yeah, Roomies was simply my roommate and I created an event and sports marketing business when we were in college. That led to me then joining some of the first company that I moved back east for. But it was a great way to pay for college, and that was human to human, face to face marketing at events on campus with multiple clients, and really is where I honed the skills of selling face to face and helping sell the first financial products.
Right. Okay. Well, look, and I also I've discovered in all of my scores and scores of interviews with fintech founders and leaders that many have kind of surprisingly colourful sides to them. I've spoken with CEOs who are Olympic skaters, professional rugby players, or those who just kind of climb mountains in their spare time. I hear that you're a bit of an adrenaline junkie yourself. What is it you get up to when you're not running Galileo?
Adrenaline, yes, both through power sports, everything from boats to motorcycles, etc. I and my family enjoy time on the lake. Wake surfing is one of our favorite activities. But then just getting up in the mountains and spending time in the mountains with nature, especially with our kids and with family and friends. A bit of a digital detox occasionally. To get away and spend some time in the mountains is one of our favorite activities.
Right, and for anyone wondering, of course, you're based in Utah, so I think the mountains aren't too far from you, so it's not quite as much of a schlep as it might be for others.
Absolutely. We're 15 minutes for me to hit the trails in the mountains from here.
Okay, great. So look, Derek, a key part of this interview is to get your take on the future of finance, but first, we are going to take a very quick break, after which we're going to continue our conversation with Galileo CEO Derek White. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Derek, let's now talk about the future of finance. So, look, there are multiple complex challenges in the world right now, and that's putting it mildly. With fintechs focused on cutting cost and profitability, is innovation going to suffer?
It's actually opening massive opportunities for innovation, both with fintechs as well as with established legacy players. And over the last decade, we've seen a notable change in how people are interacting with money. You can do everything that you used to have to walk into a physical branch and do face-to-face with a branch manager in retail banking. Similarly, in corporate banking and institutional banking, what used to take a phone call, a meeting, or a dinner can now be done with a simple tap on the glass. And that is a fundamental change in the way how the industry and the way businesses are being built and the way people are interacting with money. Changing signing on a piece of paper to a tap on the glass, and activities that used to take hours into simply mere seconds and or minutes, is creating significant innovation. And we've seen that innovation really take hold in the end user interface, and fintechs and businesses and innovation happening at the interface level to where now those activities are available. What we're really excited about, I'm personally excited about, and the business that I run here is focused on the below the glass activities. Because in order for innovation to continue to happen at the speed that it has happened over the last decade, that drives that human adoption and a new way of building trust, when it's not Derek sitting across from Elliott asking for a loan, but it's Derek looking at my mobile device, and I can't displace that decision-making responsibility onto Elliott or talk with Elliott about it. It's me making the decision by myself. That's a fundamental change in business model, a fundamental change in how trust is built and how businesses operate. So and the next wave of innovation that we believe is going to happen below the glass. Just to give you, to dimension this, Elliott, 85% of the financial institutions in the United States, of which there are about 6,000 in the United States, there's 20,000 around the world. 85% of the financial institutions in the United States operate on 40-year-old technology, much of it written in COBOL. Some of it, we have one client as an example. One client is operating on forked code from over a decade ago of original language that was written in mumps. And I don't know if you've ever heard of mumps, but finding talent that can write in code that is mumps to change the technology that enables that end user interface, that enables that end human interaction, is a challenge. So over the next 7 to 10 years, there is going to be a massive change in the below the glass infrastructure technology that enables the unlocking of what we see as the next wave of human interaction. Is not just the DIY availability of things in the mobile device and the end user interface. We're largely there on that. It's making those interactions more intelligent so that we can build trust when Elliott, the banker, isn't sitting across the table, and it's Derek sitting in his armchair, or the cross street, standing at a cross street, and I'm doing it by myself. That's a fundamental change in business model, and the unlocking of that personalization, replicating the personalization, the advice, the experience that I would get sitting across the table from Elliott versus the personalization that I get when data is presented into the end user interface and into that experience. That's the next wave of what's going to happen. And it can't happen unless the infrastructure below the glass enables that. And that's what we do.
But I suppose at the same time, you seem quite confident and optimistic that actually we're seeing a continued burst of innovation right now. But I suppose one person's opportunity is another person's crisis. And we have seen, as we mentioned, valuations tumbling. What do you make of it? Both publicly traded and privately owned fintechs have really seen a big drop in valuations. Is this something that was long overdue, do you think?
What I can say is that I find it incredibly exciting out of the discussions that we're having with clients, because out of necessity comes brilliant innovation. And some of the ideas that are percolating, again, with huge established financial institutions that are now entertaining modernization discussions that they maybe haven't had to in the past, as well as the fintechs looking to diversify their product offering. It's incredibly exciting to see. The markets will adjust to the valuations over time, but what we're seeing in the leaders, the founders, the creators, the builders of these businesses are recognizing the need, the necessity, and the opportunity to innovate and create. And that's what we do. We help to create and build. And that's what's super, super exciting. I'm seeing it personally in waves like I haven't seen in the past.
And you talked a bit, Derek, already about embedded finance and how Galileo helps clients with that. I mean, just what can we expect going forward? Maybe you can give me a couple of examples of the things that we don't yet have from embedded finance that we are going to have in the coming years.
So a couple of things that are going to happen is, one is that embedded finance is going to be more deeply integrated in the end user experience of big tech, of the big ecosystems, and a more seamless integration as to how customers and product are embedded into a single unified integrated experience. That's going to happen. One of the barriers to that globally is regulation, and how much regulators are going to look through, and that's a separate topic. But we are increasingly going to see embedded finance and product getting closer to that point of financial decision, embedded into that end user experience, both online as well as offline. And we work with a large retailer in Latin America where we have embedded finance at the point of sale in a way like is seen in few retail and product and ecosystems, that then builds a rewards economy associated that moves beyond just the traditional monetary value and starts to build rewards that can be exchanged for all kinds of activities. But tying back to the last point I made, so much of this, Elliott, ties to personalization. And personalization where it's just the single individual operating with the glass. And that's where the biggest driver of innovation is going to be happening. In order to have personalization, it's an understanding of human behavior, data, technology that presents back at that point of interaction with the customer.
And you talked about the opportunity right now for innovation and how the current situation isn't likely to kind of knock us from that path. Of course, at the same time, we are seeing big tech freezing hiring or laying off staff. Some of the kind of second tier ones like Snap, for example, laying off staff as well. Is now for those companies that perhaps have struggled in the past to hire the best talent because they were competing with these big boys, do we think that actually now might be a uniquely opportune moment for them, or for these fintechs perhaps, to go on a hiring spree, especially if they've had the good fortune or the good sense to raise money before capital became a bit scarcer and more expensive?
It absolutely is. And at an individual, everyone has a certain level of risk tolerance that they may want to personally take. And yes, we see that a lot of the big established players are looking to bring in some of that more entrepreneurial, innovative talent. At the same time, some of the talent that may or may not have been working in some of the startups is looking for something that it is at larger scale. And so the complement of those two things happening in the industry is absolutely an opportunity. But for both those in fintech as well as for those in largest established companies. The companies that are demonstrating consistent growth, consistent scale, are the ones that are attracting the best talent. And in my experience, there's nothing that builds culture like creating new product platform and scaling and growing businesses. And so talent is attracted to those opportunities, and we're fortunate to be in a position where we are growing and scaling.
Great. Well, Derek, I just got one more question from this section before we move on to the last bit, which is, of course, before you joined Galileo, I think you were a vice president of global financial services at Google Cloud. Big tech, as we've seen, has been kind of nibbling at the edges of fintech, notably things like Apple Pay, Google Pay, and the like. Do you worry about big tech eating fintech's lunch at all? That perhaps you're going to have these big however many pounds, £400 gorillas to be competing with in addition to all the fintechs?
Elliott, $1 in $4 spent globally is on financial technology out of the entire technology sector. There's room for the big techs, there's room for fintech, there's room for the large legacy players. All will play in this space, all will play in the ecosystem. Honestly though, globally, having worked all over the world, one of the biggest influences on big tech's ability to play in finance is regulation. Big tech does not want to be regulated. So they'll go as close as they can to that human interaction with money and productizing and monetizing that experience without being regulated. They don't want to be regulated. So as a regulated institution, we have the ability to partner with big tech, fintech, and traditional banks to be able to support.
Okay, great. So look, it's time now for our round of rapid fire questions, Derek. Are you ready?
I'm ready. Fire away.
Okay, so I've got 90 seconds on my phone. When my buzzer goes, that means we've run out of time. So just one word answers is all I'm after, and away we go. What fintech segment, aside from yours, has the biggest potential over the next 5 years?
3 words: below the glass.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Personalization.
Are we at the beginning, middle, or end of the fintech wave?
2 words: emerging middle.
Do you have a metaverse strategy?
Yes.
Do you think EU and US regulations have kept pace with innovations and new behaviors in financial services?
Lagging.
How would you describe NFTs, non-fungible tokens? A scam, B, an interesting concept, or C, an unmissable part of the future?
D, a hobby.
Have you ever invested in crypto yourself?
Yes.
Are physical points of sales part of the future of finance?
Absolutely.
On a scale of 1 to 10, 10 being the most likely, 1 being the least likely, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
9.
CBDC, central bank digital currencies, will become a mainstream reality in the US or EU?
On a scale?
Yeah.
4.
You'll be able to open a crypto account at a top-tier bank?
7.
That SWIFT will still be the main tool used for transferring money around the world?
3.5.
Okay, so we almost got through all the questions there, but we are out of time for the rapid fire round of questions and for our conversation. So I really just want to thank you, Galileo CEO Derek White, for joining me today. Thank you so much.
Thank you, Elliott.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.